The much anticipated release of the Hinman docs finally happened after about 18 months. Yesterday, dropping hot on the streets like a new Drake album, some calling it an absolute bombshell, and some saying absolute nothing burger. And I guess that depends on which side you're on. If you're looking at it through the lens of XRP, if you're looking at it through the lens of ETH, or if you're just an angry Bitcoin maxi who thinks that anything Hinman said means that everything is a security and all crypto must die. We're going to dive into all of that today with John Deaton and Eleanor Terrett, arguably the two people who have been the most on top of the Ripple case. We've had them all on Twitter Spaces, but great to have them here. And then on the back end, we're still going to have, of course, Christopher Inks come on. And we're going to talk about some charts and trades and how the market is reacting to all of this. Of course, after CPI yesterday, FOMC today, guys, there's just endless news to talk about right now. You guys don't want to miss this one. Let's go.
Let's go.
What is up, everybody? I am Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and tenderly swipe the like button with your right pinky. I actually don't really care. I'm not convinced that there's really such thing as a YouTube algorithm, but I guess we would find out if I did this in the thumbnails, which I obviously don't do. But maybe then we would see if it gets you 1 million people to show up. Speaking of 1 million people to show up, I was astounded when I woke up this morning, looked back at the Twitter Spaces from yesterday, and it had 1.5 million views. Of course, if you may have missed it, we had Warren Davidson, who proposed the SEC Stabilization Act, aka the hashtag Fire Gary Gensler Act, speaking about why he did that, his position there. Really interesting interview. We only were on Spaces for about an hour, but clearly it was extremely engaging. But that's not what we're going to talk about today. That's already yesterday's news that we're firing Gary Gensler. Today's news is the Hinman docs. I'm going to go ahead and bring on our guests right now so we can dive into it. John and Eleanor, how are you guys both doing today? A lot going on over there, huh?
Definitely Absolutely. A lot going on.
Thanks Right. So I had John, I said I had John Rice on yesterday from Blockworks. It was 9 in the morning. His team was going through, he said 2,000 pages of documents or something, but he was awaiting some massive bombshell coming at 11. And it seems like we already had basically everything there was to see by that time. And maybe there's nothing massively new here. Eleanor, I mean, do you think that we saw anything massively revealing yesterday, or do you think that it's kind of par for the course for what we already knew with Hinman?
Yeah, I think we definitely kind of knew what was coming down in terms of, basically what John has said for a long time is the argument if the Hinman documents is that it will most likely go towards helping Ripple's fair notice defense, as opposed to some kind of crazy bombshell where it's like, XRP was talked about and completely shunned. So I think a lot of people were hoping for that bombshell. I don't think we got it. I think there was a lot of telling information in there about other things, such as, the kind of relationship that the SEC had with the Ethereum Foundation, with Vitalik Buterin, with, and then kind of just that relationship as opposed to like having a relationship with anybody else in the space. So I think that was, a key aspect, and I'll let John get into it more. But I mean, as far as bombshells go, I really don't think so. And, John, you can get into, if you're a Ripple maxi, then, you think it's everything. If you're a Bitcoin maxi, you think it's a nothing burger, right?
Yeah, and interestingly, I think you mentioned it's the Ethereum sort of fans in the middle, or maybe those who are looking to the definition of Ethereum as a security or commodity who are really digging into this, which is sort of the collateral damage or advantage here for the whole market that's coming out of this Ripple case. I think maybe it is a nothing burger for the Ripple people, but not necessarily for ETH. So, John, I want you to talk about that a bit, and then we're going to watch the video from Stuart, the counsel for Ripple, to give us some context here on all of this.
Yeah, well, Scott, before the emails came out, I said, listen, there's been so much hype and buildup about the emails. You're talking about 2 years, 7 court orders. And I said, when there's something hyped that much, it's likely going to disappoint. It depends on your perspective, like you said. The reality is this: there's nothing in the speech that's going to affect the judge's analysis of whether Ripple sold XRP as an investment contract. There's nothing in there. And even if Bill Hinman had said XRP is not a security, the judge could disregard that because he's one official at the SEC. She's going to analyze it. It does go to the fair notice issue because it shows, and more importantly, it goes to the individual guys. Remember, Brad Garlinghouse and Chris Larson are sued individually, and the SEC's theory that they must prove is that they were reckless in not knowing XRP wasn't a security, and that standard means recklessness is met when it's so obvious an ordinary person would know that XRP is a security. So when you see the debate going back and forth about digital assets and whether or not the SEC has jurisdiction or what is a security, how do you apply these 1930s laws to modern day blockchain technology, that helps the individual defendants, win that case. And so, but you mentioned the video Ripple did, put out a piece that sort of summarized the highlights.
Yeah.
And I think it would be beneficial to your audience.
It's 4 minutes long, guys. I mean, that's a bit longer than things we show, but I think it speaks to exactly what you just said, which is that it seems like the Ripple guys just want mass confusion. They want to show that the SEC had no idea what they were doing here and can't firmly state that there was any wrongdoing. Because if you watch this, as a layperson, it almost feels like this would be against the crypto community, right? That the SEC itself is saying, dude, don't say all this stuff. And Hinman's some wild card lone gun who's out there saying a bunch of things that the SEC doesn't believe. But then you dig into it and the SEC left it up and Clayton referred to it. So let's just watch the video, guys. It's about 4 minutes, but I think it's really important context.
14th, 2018, then SEC Director of Corporation Finance William Hinman gave a high-profile speech where he declared that a token is not a security when it becomes, quote, sufficiently decentralized. But internal emails and documents show that senior SEC officials repeatedly warned Hinman that his speech wasn't true to the law and would greatly confuse the markets even more than they already were. Now, after more than 2 years and 7 court orders, we can finally share some of what we found in the Hinman speech documents. The SEC head of trading and markets warned Hinman that he was making up factors that, quote, go beyond the typical Howey analysis, as in not in the law, and that the speech could lead to not just confusion, but greater confusion on what is a security. Hinman ignored him.
If the network on which the token or coin is to function is sufficiently decentralized, and the purchasers no longer have a reasonable expectation that a person or a group is going to carry out essential managerial or entrepreneurial efforts, those assets might not represent an investment contract.
The same official told Hinman he should tie his speech, quote, more closely and explicitly to the Howey analysis. Hinman not only ignored him, but deliberately created factors beyond those identified by the Supreme Court in the Howey case.
I wanted to just note a few things. This list is not meant to be exhaustive, but these are things that we look at.
The SEC's own general counsel warned specifically that it's legally irrelevant if someone retains a stake in a token and is motivated to take action to increase its value, and that Hinman should delete it from the speech. And once again, Hinman ignored them and said without any legal support that it was important to ask.
Has that person or group retained a stake or other interests in the digital asset such that it would be motivated to expend efforts to cause an increase in the value of the digital asset?
Both Trading and Markets and the General Counsel also disagreed with Hinman's belief that if a network was sufficiently decentralized, information asymmetries would no longer exist, noting that a network creator would likely have more information than a retail holder, using Vitalik Buterin as an example. They warned Hinman that by creating this, quote, other category and focusing on information asymmetries, he was exposing a regulatory gap that the SEC may not have the jurisdiction to fill. Again, Hinman ignored them.
As the network becomes more truly decentralized, the ability to even to identify a promoter or to make the requisite, and someone that could actually make the requisite disclosures becomes in many cases difficult or and perhaps much less meaningful.
On June 4th, Hinman wrote that he didn't see a, quote, need to regulate Ether as a security, and set up a call with Ethereum's co-founder Vitalik Buterin later that week to, quote, confirm our understanding. On June 11th, the SEC's own general counsel advised against including any direct statement about Ether in the speech because it would be difficult for the SEC to, quote, take a different position on Ether in the future. The next day, Trading and Markets wrote that the statements about Ether were, quote, likely to create more confusion. Hinman ignored all of them and decided to make headlines, picking winners and losers instead.
Moreover, putting aside the fundraising that accompanied the creation of Ether, Based on my understanding of the present state of Ether, the Ethereum network, its decentralized structure, we believe current offers and sales of Ether are not securities transactions.
The emails show that Hinman knew he wasn't following the law. He knew he was making things up. And he knew that his speech would result in greater confusion in an already confused market. But Hinman went ahead with the speech anyway. And the SEC, despite knowing all this, touted the speech repeatedly. The SEC chairman himself pointed market participants to the speech.
Bill Hinman recently outlined the approach we take to evaluate whether a digital asset is a security. And I encourage you to take a look at Bill's speech, which is available on our website.
The SEC knew the speech didn't follow the law. The SEC knew the speech would create greater confusion. And the SEC knew Hinman was making things up. So why is the Hinman speech still on the SEC's website? Why was it ever allowed to be given at all? And why has the SEC pushed a policy of regulation by enforcement, falsely insisting the rules are clear?
There's so much to unpack there. Like, listen, but as a layperson looking from the outside, it seems like the SEC's major problem here is clearly they have no cohesive message, but Hinman is effectively saying that you can morph from being a security into not being a security, right? And I believe I read that the speech originally was actually called digital asset morphing or something like that, right? Something to that effect. And the very idea that you could have that safe harbor or transition from security to being decentralized just violates everything that Gary Gensler and the SEC are saying now.
Oh,
is that the core of this?
Absolutely, Scott. We learned a couple things. One, we learned the SEC itself should not be touching digital assets. I mean, just look at the reason why the general counsel of the SEC said, I think you should take the ETH out of the speech. Don't say that. Did he say because you're not following the law? Scott, he said, because it will limit our ability to take a contrary position in the future. I mean, is that how we want our financial markets regulated?
Never make a clear rule. Never do that.
As a matter of fact, in one of the Brett Redfern, who was the director of trading markets, in one of his comments, he said, this is going to cause greater confusion and you need to give less detail. In other words, keep it vague. Keep it vague. You're going to confuse people, and we want to make it vague. And so yes, you're spot on about that. And I want
you can see it right here. Look, crossed out digital asset morphing called digital asset transaction under the Securities Act of 1933. I found it.
And you're right. When you go to the first draft of the speech, it's not a draft; it's an outline, and it's called what you said, morphing into a non-security. But just know for your audience, Hinman, when he replied, he called it the ETH speech. So from the very beginning, Hinman called it the ETH speech. And the reason people need to know that's important is that in the speech, he says Bitcoin and ETH are not securities. He doesn't call it the Bitcoin ETH speech. He doesn't call it what it was normally called. He called it the ETH speech for a reason. So the one thing I said, and I predicted it, and this did come true, I said that when the emails come out, it'll make people scratch their head more. Why would you give this speech, which, goes to certain specific reasons we can talk about or not talk about?
Eleanor, why then give the speech? I mean, isn't this the hashtag ETHgate conspiracy theory, Vitalik Buterin and consensus? They convinced him. They were just saying, I mean, it is kind of strange to go to the founder and say, hey, are you guys decentralized? And what does that mean? And then give a speech about it, which is what it seems like happened here. And I'm not claiming any of these things. I just think that's the narrative then surrounding that, where that leads. Is that right, Eleanor?
Yeah. And John and I both said from the beginning that we wouldn't say that there was corruption here. And I still don't, I'm not one to say, I'm not a lawyer. So I always stick by I do think that there are big conflicts of interest here. And Johnny went and said this on Twitter yesterday, basically the same thing. Like, a blind monkey could see that, there's issues here. And the fact that the SEC ethics office wasn't copied or wasn't privy to this speech. And, Hinman had been working for Simpson Thacher at the time. He went back to Simpson Thacher. He's there now as an advisor. There are these conflicts of interest. And you think, well, as you read these emails and the redactions are gone and you see the correspondence and especially the Buterin line, the Buterin connection, and you're just like, why? And, it's crazy. And my initial takeaway was kind of like, before I read everything, this was like 8 o'clock yesterday. So like not everything had come out yet. And I said, I tweeted something like, I think my biggest takeaway right now is the fact that, the SEC officials here clearly thought that they were kind of collaborating on this thing, that they were giving their best advice, that this was going to be market guidance. And, and I thought, SEC, because they've argued, they flip-flopped, right? They said, it was supposed to be market guidance. Oh, no, it wasn't. It was just a personal opinion. So I said, this goes a long way to showing that the, SEC thought it was going to be market guidance, kind of shoots down their argument. But then, I'm looking at the stuff from Hinman and everything that was suggested that he didn't put in there. And then I'm thinking to myself, was that just a personal opinion? Did he kind of go rogue? Can the SEC argue it was a personal opinion because he ignored so much advice about ETH, about existing
Seems
law?
like it's a personal opinion based on how many things he ignored.
So I was just like, my head hurts. Like I can look at it one way and I can look at it another, and it's just it's an interesting contrast.
Right, but can you give? I understand that at that moment, if you watch that speech, you would think this guy's personal opinion. He's gone completely rogue. Look at the evidence. But then Jay Clayton points to the speech specifically, and they leave it on their website for years.
Right,
so
and that was my next.
I think it's like, talk about morphing. we morph from personal opinion right into market guidance.
Well, right. I think the important thing to know is that the market was desperate for some form of clarity. And, they wouldn't talk about Bitcoin at first. And finally, there's this consensus that Bitcoin's not a security. What about ETH? What about XRP? What about these other, major cap tokens? And you had Hester Peirce out there, who I think has good, intentions. And so what happened is, once he committed to the speech and it's out there and the market was dying for it, you had Hester Peirce, a commissioner, Robert Jackson, a commissioner, the director of trading markets. They all said, okay, we've accepted it. It is guidance. Look at that. And, what people need to understand, she brought up about the ethics department. If you look at the email chain, all these different departments got this speech, except for the ethics division of the SEC. And your guest on Spaces yesterday, Congressman Warren Davidson, to his credit, he's paid attention, and he asked the SEC enforcement director, while under oath, he said, did Hinman have that speech screened by the ethics office at the SEC? And the SEC enforcement director goes, oh, I can't comment because of litigation. The ethics issue was never litigated, just whether or not the speech is privileged or not. He refused to answer it because we know the truth. Scott, it works like this. Whoa, you're going to give ETH regulatory clarity? That's big news. So we just got to make sure, since we never talk about specific tokens before and after, Scott, no one will talk about any specific token. This one time you're going to mention ETH, we just got to make sure, Bill, you don't own Bitcoin or ETH, right? No. Your law firm, since you're an ongoing profit sharing partner, you're not retired, you're getting profits as they make it. Do they have any connection? Oh, they're doing the Canon IPO, which is ETH hardware and Bitcoin hardware. Oh, your firm's a member of the Enterprise Ethereum Alliance. Bill, you can't give that speech. It would take a paralegal in their first year to uncover that conflict. It would take less than an hour.
But then that's the head scratchers. Why would the SEC leave it on their website and continue to refer to it as reference for how digital assets should be classified? Is that just stupidity? I literally don't understand it. Because it seems very clear that at that day, there was a clear conflict of interest. He gave a rogue speech, and they should have said, dude, Hinman's out.
No, you're right. The only answer I can give you is yes, is the genie's out of the bottle. We can't put the genie back in. The market's dying for some type of clarity. And then, of course, the sufficient decentralization, like he added a factor to the Howey test. I can assure you there's no Howey prong that says how decentralized are you. And imagine if, Scott, if you were in power, if you called David Schwartz, the CTO of Ripple, and said, hey, I'm going to give this speech that the XRP ledger is sufficiently decentralized. Do you agree?
That's what I'm saying. It's a joke.
I can't play my calendar.
No, Bill. I'd actually rather you go the other way with that and cause me a decade of legal troubles, please. But I'm still, it's just interesting to me that this is still viewed, certainly by Garlinghouse and those guys. And you made the case, it makes sense for them personally. But I don't even see how you can make the leap from what Hinman did here to somehow saying that XRP is not a security. I don't see how you make that jump. And that's what a lot of people maybe incorrectly are viewing this as.
No, they are. But here's the thing. People were like, well, why did Brad Garlinghouse say that you will be shocked? And you got to look at from his prism. For example, it's not just the speech. What was in that video you played that is a central point? Ripple was targeted. And that's a fact. I've said before that they're going to give ETH a pass and Ripple and XRP would be the sacrificial regulatory lamb, right? And that because the general counsel said whether or not a group of people own a token and are motivated to increase its value is irrelevant. I don't think you should put that in the speech, yet he kept it in the speech. Who, Scott, does that apply to? It applies to Ripple. They own 50% of XRP. So that's where I think when Brad Garland goes shocked, he's like, wow, like they literally.
Yeah, it doesn't matter that we own 50% of the supply. It doesn't matter we were sending that potentially to exchanges and selling at strategic times, which, by the way, the ETH Foundation has notoriously done at the top of every single ETH cycle. So I don't think that that's unusual. I mean, eventually they're all going to sell.
Yeah, that's the number one part of the SEC's case when you look at what was unredacted from the SEC side, their case against Ripple. Like the heart of their case, Scott, is, well, you gave offered $1 million to, I believe it's Kraken, and $5 million to Coinbase to list XRP, and things of that nature that other people have done. And you had market makers doing programmatic sales. I mean, that's really the essence of the SEC's case, in my opinion. And so, but I just wanted people to understand from my belief of why Brad or someone would say you're shocked. Well, if you're the one that was sued and they're seeking your bank accounts and coming after you and targeting you, and then you learn this, it would be shocking from your personal perspective.
Let's say that the best case scenario happens here for XRP or for Ripple, and they win. And I think we know that doesn't really mean they win, right? They win this, but the SEC can approach it in different ways. I think we've been pretty clear about that. But you just talked about the fact that they paid for the listing on Coinbase and Kraken and all these things. Well, when this case came out and it was deemed a security by the SEC, those very same exchanges quickly delisted and did arguably harm to Ripple and to XRP. And we're seeing that nobody else is getting delisted now. I don't know if it's just fatigue and they've listed 60 of them, and Coinbase obviously isn't just going to go delist 60 things in the middle of this fight. But do you think that Ripple, if they win, has a countersuit here to say, listen, you look how much harm you've done to our company and to our project and our coin through this entire process?
And our investors, John, you know better than anyone because you represent 75,000 XRP investors who have. Can you hear me?
Yeah, we can. You broke up for a second, but it might have been my internet or yours. Yep.
Yeah, you're good.
You're good.
Awesome. No, I was just saying, I mean, not just the company, they've been forced to go overseas. They can't operate in the US. And, that hurts not just their business. I mean, they're a profitable company. They have a lot of cash on hand. We know from Brad Garlinghouse that they spent about $200 to $250 million fighting this lawsuit. So, they're not strapped for cash, but at the same time, it's their reputation, it's their investors. And John, you represent 75,000 of them. So there's that harm as well. So
John, what happens there for those 75,000 people in the best and worst case scenario as we kind of figure this out?
Going after the SEC, you got issues of sovereign immunity, qualified immunity. Going after the government for gross negligence is almost impossible. Bernie Madoff's probably the best example. Everyone knows the story of how the SEC was told like half a dozen times, this guy runs a Ponzi. Investors sued the SEC by saying, look, you had all this evidence and you never prosecuted them and we lost all this money. The judge dismissed it because it's discretionary and it's the executive branch versus the judicial branch, separation of powers. The real issue here, Scott, and it's something that certain people should be concerned with, is whether or not a class of investors that I represent have a case of regulatory capture against certain people and certain entities. That's in the civil court. And maybe some days you might hear something about that.
It's not going to be today, is it?
No.
Come on,
That's
John.
the bombshell. That's the bombshell, Scott.
Is that the bombshell that we're really waiting for here? Right. So, so then I guess FTX creditors who are angry that the SEC was meeting with SBF and did nothing about it aren't going to have much of a case or any recourse here then, right?
I mean, usually not. Now, the question, what we need is if you can prove like criminality and things of that nature, there's always you've got one standard here, and then there's this huge abuse of discretion and all this that you can overcome, but you have to have a wealth of facts and information. You can't just sue because you'll get dismissed. So if there's a criminal investigation or an IG investigation, there should be an investigation into the speech and how it was formed and all the emails. And there should be an investigation of that FTX meeting 2 times with Gensler. What was said? Was there really a short form registration form that the rumor has, Tom Emmer brought this up, that they had negotiated a short form to give FTX like an advantage that would have hurt their competitors? I mean, this stuff needs to be really looked at.
I love that when Gensler was asked under oath about meeting with SBF, he said, "My calendar shows 2 official meetings."
But we know
we went to dinner 17 times.
Yeah. You picked up on that, right?
Yeah,
he's got 2 separate calendars though, so.
Yeah, my official calendar recall, right? Yeah, and it's been pretty widely reported that SBF was effectively working on a deal that would make them, as the people helping to create this legislation, safe from any harm that could come of it. But I think that'll come out one day.
And while he was meeting the Bernie Madoff of crypto, the number one publicly traded, the only publicly traded exchange, number one in America, a U.S. business, the CEO couldn't get a meeting. I don't know if you remember when Brian Armstrong tweeted out that he was told that Gensler would not meet with any crypto companies. And then shortly thereafter, he's meeting with SBF.
And he's meeting with not just SBF, but with IEX too, because FTX and IEX wanted to make the first regulatory, approved, SEC approved crypto exchange. Charlie and I reported that, now that FTX has gone away, IEX is actually talking to Coinbase about it. Now Coinbase is getting sued.
Fun. Stay away from IEX. I mean, Eleanor, what do you think the prospects are here that we see huge victories against the SEC, and what kind of timeline?
I think the timeline will be long. And John, you could speak more to this just from the legal standpoint, but I do think that people are going to drag this out. And by people, I think, the SEC, I don't think the government necessarily wants to lose to the people and lose to this cause that they're not on board with. Obviously Gary Gensler has made it very clear that he's going after crypto. He wants to make his name on cracking down on crypto, being the chairman that got it under regulation, got it to come into compliance. So when these companies push back, they could have all the money in the world, but at the end of the day, you're fighting the government as well. So, I think it's going to be a long process. I think Ripple will be the first step in that. And then you'll see Coinbase, you'll see Grayscale, Binance now. Like, you've got so many companies and so many big names coming out, and people are supporting them. It's hard to fight the government. Right, John?
Yeah. I feel like the next wave is just going to be a bunch of like mid-tier and low-tier VCs and smaller exchanges, just so that Gensler can get a whole bunch of easy settlement wins under his belt. Unfortunately, I'm not trying to go tin hat, but I don't think this is done. I think they're going to drag out these large ones and then angle for a ton of settlements that give them precedent in between. I just find it really interesting that the Ripple case is not Gensler's, right? It's Clayton's. And the Coinbase and Binance cases will be solved long after Gensler's gone, whether he leaves in a positive or negative manner.
Yeah,
so it literally just seems like a massive PR campaign to me.
Yeah, and I have to tell you, talking about calendars, Clayton dropped this suit against Ripple on his last day as he's walking out the door. But guess who he met the day before, Scott, to talk about? He met with Gary Gensler.
I was going to say it must be Gensler.
Who was the incoming chair? Because you're not going to.
We can say it's Clayton, but it's Gensler, right? You don't drop something and a bomb on your predecessor, on the next guy coming in without briefing him and making sure he's cool with it.
Exactly, you said it perfectly in that scenario. And here's the thing: is that this, even if the Ripple case itself, this judge's ruling legally is just one federal district judge. It's not an appellate court. It has limited, precedential value and all of that. Even a fellow Southern District New York judge, on the Coinbase case could disagree with this judge because they're of equal level. However, the industry desperately needs some good news coming out of the Ripple case. Even if you hate Ripple, even if you think they dumped on retail,
I've said that
all of
100
those
times.
things, right? 100%. You need to not root for Ripple, but root against the SEC's overreach. And hopefully, we get that, because at least if the judge were to bless the SEC's theory, which I don't think she will because it's so overbroad, but if she did, it would get, can you imagine Gary Gensler, how he's going to use that politically? And it's sort of almost bolstered.
I'll make a cute little cartoon video and it'll have Kim Kardashian's butt dancing by or something.
He already uses library, and that was a small, John, you worked on that case. It was a small case, but they bring it up every chance now. Like, we won against library. So could you imagine what he's going to say?
And so if the Ripple, if they lose the Ripple case, then Gensler will say, "Oh, it's facts and circumstances. Each case is different, and each case has different facts, and it's not that big of a deal." But if the SEC were to win, it would be a huge PR campaign for Gensler, and that's
all he wants. That's all he wants. I'm convinced he literally doesn't care if he wins, loses these after he's gone. I'm convinced he's just. This is like one long job interview for him. And he views, by the way, he's not getting any better jobs. He's hated everywhere from what I hear. But, he probably is not willing to.
You know that he was the kid that didn't get picked and took his basketball and went home. That first game of pickup. That's who he is.
Yeah, the Napoleon complex all day for sure. So even the best case scenario then for Ripple and for XRP holders doesn't necessarily mean the best case for crypto. Do you think that we will see one of these cases potentially rise to the Supreme Court for final clarity?
I think the best case is Ripple, because it has it's first in line. It's got a 2-year head start on the Coinbase case. If you look at the Ripple summary judgment brief, it's really, when it came out, I said it's a brilliant brief and I hate it. It's written for the Second Circuit because it's all about case law and all about, the inherent nature of an investment contract and a security and blah, blah, blah. So if Ripple loses, it's definitely going to the Second Circuit. If the SEC loses, I don't think they appeal, because why would they? They're getting blasted. Almost in every court hearing, you hear the judge is taking issue with the way the SEC is conducting themselves. Even just
the Grayscale judge, the Voyager bankruptcy judge, and they were so dismissive. Not like, hey, maybe clarify. I mean, and meanwhile, yesterday, for anyone who was watching, I'm going to let you guys go in like 5 minutes, but I've got your captive attention. But the Coinbase. Right, the Coinbase was supposed to get an immediate answer on there, and it's like, and the SEC said, hey, "How about 4 more months?"
And Binance as well. Binance was supposed to get a temporary restraining order, and apparently, from what the reports I saw, the judge was kind of taking the SEC to task, and she said, I don't see grounds for giving you this temporary restraining order, so go away, figure it out yourselves, and come back.
Yeah, Binance did the right thing. Listen, Binance came in and said, listen, and this isn't like me, promoting Binance. I'm just telling you the facts. They came in and said, here are all the customer accounts in the United States of U.S. investors. Here's the private keys, U.S. government, SEC. They're protected 100%. You're in control. We can't move it, touch the money, but, don't freeze us. The SEC's initial response, no, because they want destruction. They wanted to freeze it. They were like, we won't make payroll. Like, if you freeze our accounts, we can't pay our employees. And the judge was taken back by the SEC being so unreasonable. And so, and let's not forget, the judge in Ripple literally said the SEC does not have a faithful allegiance to the law. I mean, that's astounding.
They're a bad faith regulator, and literally anyone with a brain knows it, but that doesn't mean that they won't win. Eleanor, I have to ask you, you always seem to get the scoops. You're first on top of all of this. Okay, so Hinman's passed. What's the? I know I can't tell you what the next bombshell is though, but what is the next big news you're looking for? What would I mean? Is it literally just this case comes to a conclusion at this point? Because Hinman's been the talk for like 2 years. It feels like
he has.
Right. So is it now we just kind of sit and wait and see how this resolves, and when can we potentially see that happen?
Yeah, I think the next big thing to look out for will be the outcome of summary judgment. You know, I listened to an interview with Brad Garlinghouse at the end of May. He said it's looking more like weeks, not months. So you would think as the CEO, he might be privy to some of those private talks where they're thinking about timelines and such. So yeah, I think that's the big next thing to watch. Obviously, that'll have big precedent. That'll have a big impact on the industry. But also just keep an eye out for more stuff from Gensler, because I hear he's not done. You know, we saw Coinbase, we saw Binance. He went after, you know, went big or went home. He went after the biggest players. But to your point, Scott, I think he's going to start going for the smaller people because he thinks he can probably get a win over them with that sort of easier, not taking on corporations or big companies.
Yeah, they love to tout the like 96% success rate in court, and then you dig into it, and it's literally just a bunch of people who can't afford to defend themselves settling.
Yeah. How many entities can afford $200 million in legal fees?
And startups too, like
you can't. And you look at Library, the Library CEO said, Jeremy Kaufman said that they said we will bankrupt you, and then they proceeded to cost them a couple million before the lawsuit, and then filed the lawsuit on the eve of statute of limitations, cost them a couple more million, and bankrupted them. And I always say, Scott, when I talk about
and then threw him
Library,
a bone on the settlement.
I always say, if you really look at the LBC token, like it really was using the platform. And,
it's a utility token.
Yeah, and I represented Naomi Brockwell when we went in there, and the SEC agreed, since she's never sold or purchased an LBC token, that she didn't own an investment contract, and thousands and thousands of others were like her. And the judge said, well, will you give them clarity on that? And I'll be able to publish this transcript soon. And the SEC said, we don't do that. And so that's why I went in trying to make sure that his order didn't apply to secondary market sales. So,
Scott, can I tell you something else I'm watching?
Yeah, please.
Yeah. So if you guys were watching, I caught the tail end of it yesterday, but the House Financial Services Committee hearing, they they heard testimony from this guy named Aaron Kaplan, who's the CEO of Prometheum. Prometheum, I feel like it wasn't made as big of news as it should be, unless I just completely missed it at the end of May. But they've recently got a license to be a custodial, a custody holder for cryptocurrencies in the United States. They're SEC approved, they're FINRA approved. And it just so happens that the CEO, I had coffee with him once, he believes that we didn't talk about every single altcoin or every single crypto, but he said to me, because he knew I was covering the Ripple case, like, well, XRP is clearly a security. So, he's got these kind of these tendencies to talk at the same points as Gensler, as the SEC. The Dems brought him as their witness. So that the reason why did Prometheum get that special license to be a custody holder a wallet provider in
but
the
we've
United
had
States.
these now registered people, and they get the blessing from the SEC, but then you can't trade any of the actual crypto on her.
Yeah, Scott, I don't know if you saw the congressman take that CEO to task. Did you see that clip? If not, I'll send it to you. Where he's like, they can't even trade Bitcoin, they can't even trade Ethereum, and it's the same guy that sent a letter, a year and a half ago saying how desperately there needed to be new regulations. All of a sudden he flipped. I'd like to see his calendar and who he met before.
The official one, we had one in the office, 17 at the restaurant, but yeah, whatever. Well, guys, I think I've taken up enough of your time. Not only today, but I feel like I've been harassing both of you constantly with spaces. And
you're doing a great job.
You are.
You're doing a great job out there, man. I appreciate it. I'm a big fan of you. I think you're one of the good guys in this. And you and I have a lot of parallels. Everybody calls me XRP attorney. Like you, 75% of me is Bitcoin. But the Bitcoin maxis hate me.
Oh boy, they get super. They're really after me lately. I love it, to be honest, because it gives me an excuse to trigger them. But hey,
we'll keep doing what you're doing.
We all have our hobbies. Well, thank you both so much. And as this progresses, obviously, we'd love to have you back here and both on Spaces to just keep us updated. Makes my life a lot easier if I don't have to read and I can just listen to you guys.
Thanks, Scott.
We got
Thank you, John. Thank you. And everybody, please follow both of them. I'm hoping, if it's not in the description already on YouTube, we'll make sure we put both your guys' Twitters there. Thank you.
Thank you.
Awesome, right, guys? How you like my new show? Yeah, no, usually on Wednesdays, obviously, it's just me and Chris, and don't think that Chris is gone. He's not. We just pushed it to the back so that we could get some more people in here before we start talking about the charts that we got. I do have Chris here. What's up, man? How are you? You were sick yesterday, right?
Do what?
You were sick, weren't you? Are you still sick?
Yeah, man. I'm still kind of a little bit down, but I'm back though. So
down, not out. Down, not out. So listen, guys, the plan here is that we're going to, instead of just wildly looking at everything on the sun, I want, when Chris comes in and potentially other guests charting on different days, we want to look at like the best ideas right now. Like, what are you looking at? Here's the 3 or 4 things, whatever, that you're most focused on at this exact moment to kind of really zoom in for you guys and help you kind of figure out how to start looking at the market and where you should be focusing at any given moment. So let's go ahead and do that right now. I'm going to bring up your screen. Tell us what you're looking at.
All right. Well, the first one I got here is NVIDIA. Everybody was talking about, it totally, my target originally was here, and then we had that big gap up, and it surprised everybody. It flew up there. And then, of course, you've got everybody who was already calling tops all along the way as it continue to make higher highs, say, oh, it definitely has to be topped here. And I've said, no, as long as we're holding right here at support, I think we've got 450, potentially 500 on like a final push. I do think that
I think it's final push too, though.
Yeah, I think stocks are kind of getting to that toward the end of it. But a lot of these stocks I'm looking at are like 5 up. So after they're done, I'm looking for a 3 back and then continuation higher. But this one right here, I'm looking for us to rally up to maybe about 446 or so. That's right around that daily R1 pivot. And if we get that, I expect that we're going to have a pullback. And that pullback, I want to see continue to hold support right around this kind of lows area here. If we can do that, it starts rallying up again. Then I will look up there at 490, which gets us pretty close to 500. It's a psychological number. So if we're rallying to 490, we could quite potentially hit 500, even pop out a bit higher. But as always, we've got invalidation or levels that we're going to look at in case it doesn't follow through. And, basically there's this big gap here. And if we're falling into that, especially if we're getting below this daily pivot, this is right around 356 or so.
356, yeah.
Yeah, if we're getting through that, I think that says we're done. And, we minimally fill in the pivot, or I'm sorry, the
down
gap
to 290,
here.
yeah.
Yeah, down to at least 300. Like but yeah, I think we've still got some further upside on NVIDIA right now.
Here's my prediction looking at that chart. You pop up to 446, massive overbought bear div, and then you get that retracement.
Yeah, exactly. But I'm going to watch for it though, man. If we only get pulled back into this kind of this 370, 375
you'll already have the div.
Area,
then the bearish divergence will be there already. If it turned right now, it looks like, not obviously counting wicks, you could have that. So
yeah. So that's the first one I'm kind of really looking at here. People are going to hate me for this one, but I'm going to talk about it anyway because it looks pretty all right. So this is BNB.
I think I agree. I was kind of looking at it. I was like, nice dip.
we got this right here is the weekly, so we get a better look at this. But I mean, man, this looks pretty clear. Like 5 up and then an A, a B, and then 1, 2, 3, 4, 5. So got like a flat correction here. We dipped just below this 220 swing low here. I know there was some talk. People were worried about that BNB hacker. He's got like millions of dollars on loan or something. And people were worried about because he's coming up close to the liquidation of his loan. And people were worried about, if that happens, a lot of sell pressure on BNB. But, the chain itself, whatever, they came out and said, they had done some kind of governance thing or whatever, some vote last year, and said that if something like this happened, they'd be covering it with the chain itself. So I don't think that, I think that's what gave it the bump there. And it's not really, I don't think it's really an issue. I've got 426.20 as this local 1, 2, 3 here. And then this larger 1, 2, 3 is up here around $1,000, 1,007. Now, in order to get that, we need a breakout above wave B here at 350. And then a breakout above this wave B at 669.30. Those would be the areas where it's like, okay, yeah, it's most likely doing that. But if we zoom in here, you can see here on the weekly, we're already oversold, starting to curl a bit. If we jump over here to, let's get over here. You can see that the daily here, Stochar RSI is just breaking out. You can see we've got this pullback into all this volume here down there at the S4 pivot. By the way, we ran the pivots. We got rejected around the pivot here, ran all the way through the S4. Most likely that's going to be complete. Now, if it continues going down lower, I'd look here at this 206 area. But I think it's done or just about, finishing that up.
Again, following up on the weekly, let me show you something real. Oh, sorry. I was just going to say, this is the first ever test. 200 MA has only existed, obviously, since August 21, guys. So, 200 MA on a weekly means this thing has to have been trading on that exchange for 200 weeks, right? So before you can even get one. But this is the first ever test of the 200 MA in the history of this. For people who do watch those, we've been talking about, obviously, the 200 MA on Bitcoin, which it just lost, by the way, on the weekly. But this is the first test ever, and right now on the weekly, putting in a bit of a hammer. So, I don't think miserable. I'm going to go back to you here.
Yeah, I mean, if we're looking at this, we've potentially got 1, 2, 3, 4, 5, or maybe 1, 2, 1, 2, 3, 4, 5, because it's a 3, a 4, and a 5. The idea is we should get rejected probably right around this 255, 260 area. If we can push up a bit further, we'd just be looking to pull back maybe around 235 or something like that. And then we just look for it to start rallying up once more on that one. So a lot of people are probably getting a lot of hate comments for that. But are you crazy? It's BNB, Binance, and all this. But, I think traders do well to stay away from news and news events and just kind of trade the charts.
Well, I think just rationally, listen, if you believe any of the FUD or you've dug in and you think that Binance is selling all their Bitcoin to defend BNB and kind of the FTT narrative, okay, I get it. I think that you can't assume those things are true. I could see why you would just stay away from BNB entirely right now, right? Because you can go find anything else to trade. But if you also realize that anything against Binance is going to take 4 or 5 years to resolve, and you've just gotten a massive dip and you think this coin is going to continue to exist, well, you just got to dip into oversold on news that gives you a potential opportunity if the chart looks right.
Or even if you're holding a lot of people are holding a lot of BNB out there. And so,
I still hold BNB, just to be transparent. I still hold some.
Yeah. So I mean, you don't want to panic sell at a low there when it could potentially rise higher. You could.
I don't know where I would sell it because I don't have access to any exchanges, right? But yeah,
right. Let me see here, and I
like that idea. It's very polarizing. We like to be contentious and controversial here.
Make some waves, right? I've also got this chart here. This is USD against the Canadian dollar.
Oh, I like it. Let's get some Forex going.
Yeah, I mean, the one thing I noticed here, we've got this range. We've got this huge spike of volume right up here at the top as we're going through the range. And we're just like really pressuring the lows at the pivot here. I believe if we get this breakdown, a clean breakdown here, I don't say it can't bounce before, but once we get this clean breakdown, this is about 1.32259. If we can get a clean breakdown through that, I mean, there's a high volume node there and everything. I mean, that just, I think you minimally look down here at the S1 pivot on the weekly. And that's a huge bit of move there. That'll get you down around 1.26417, right around there. So this is another one I like. Again, this is the USD against the Canadian dollar.
Yeah. So guys, obviously that means it's effectively shorting the dollar, right? Saying that the Canadian dollar will rise in value against the dollar. And for those who don't trade Forex, the pairs can be back and forth depending on which pair you trade. So it can be a bit confusing. Sometimes when you're shorting, you're long the dollar. And sometimes when you're shorting, you're short the dollar, depending on the pair and how it's structured and traded. But I want to just know how much then, when you're looking at a dollar short in theory against a different currency, how much are you looking at that in a vacuum, and how much are you considering DXY in general, like for dollar strength when you look at those trades?
This is a commodity pair. And so Canada gets like, I think it's still like around 25% of its revenue from oil sales. So what you're really looking for here is you're looking for a weak dollar and strong oil. And that'll get you going there, because that
Norway is similar, right? Yeah. I remember trading USD NOK or whatever, Norway, and it's kind of very similar. Australian kind of has some.
Yeah, exactly. Yeah. So as long as the dollar, I mean, the oil's been pulling back pretty big for quite a while here. The dollar itself, it's dropping today on, we're getting ready to listen to Powell later on and the rate, interest rate decision there. And so I just, I don't have any change on the dollar. I think the dollar continues going lower overall. And I think oil may have found a bottom here. So, I mean, you've got two things kind of at work here, but if we lose that low there, I think we're probably headed down there, probably around that S1 pivot on the weekly there.
I like it. Maybe we should do the, one stock, one crypto, one Forex. But it's funny. You were always a Forex trader before crypto. Like, do you still talk about it a ton in the group? You still,
still. And I've converted. So when we first got the trading group going, everybody was almost 100%, crypto. And I said, listen, guys, you can use these same things across other markets. Hey, check out Forex. It's the original degen market, right? Before crypto.
100x leverage, but you need the 100x leverage because the moves are so small relative to crypto, right?
Right. But yeah, so, our group just flourished, man. Everybody's trading everything now, which is fantastic. Everything from metals to energy to futures to stocks to FX. I mean, it's been great. And it allows them to move to a different market when it's boring, in crypto, which is a huge thing. So
I was muted there for a second. I'm laughing because I was reading the comments and this guy keeps asking when Deaton's coming on. You might want to rewind to the beginning of the video, buddy. We did that for about 40 minutes. Awesome, Chris. Well, dude, I know you're sick, and I think those are great ideas, and I got Twitter Spaces in a few minutes. So, man, thank you. That's awesome. Everybody follow TX West Capital. We're playing with the format, as you guys can see here. Today, we just had to talk Hinman, obviously, but Chris is going to remain a regular. I can promise you that, man. Thank you so much.
All right, man.
I'll see you soon. So, guys, I see in the comments over here before I run, Cloud Casino saying, today we have a big court day for Voyager. Judge is supposed to rule for or against the plan administrator today. What a shit show, man. I actually reached out to the UCC, Jason Raznick from the Voyager UCC, and I just like to ping him with like, hey, dude, we ever getting paid? They serious with this 36% thing? But I said, are we getting paid? Like as a joke this morning, and he responded, the creditors keep objecting. We would have last week. It's unreal. The one objecting only has $1,000 there. So the reason, apparently, according to the guy from the UCC, that we haven't gotten our money back is because a dude who's got $1,000 on Voyager is objecting. I mean, God, these systems are so fundamentally broken and disgusting. Today, guys, as I said, we do have Twitter Spaces. Today's going to be epic because it's FOMC, so we're just going to run from like 10:15 a.m. Eastern Standard Time, apparently to like 3 or 4 p.m. And we're going to have our normal crypto town hall. Like I said, 1.5 million people already just from yesterday's. We have our normal town hall, but then moving into the FOMC, we have Nouriel Roubini joining at 11:30, famed economist, famed Bitcoin hater. Just hates us. So it's going to be a really interesting conversation because if you guys have listened to Spaces, I don't know if I'm allowed to talk to him, but if I am, it probably won't be that great for us both. So it could get contentious. I don't know if they're going to let us talk crypto with him or not, but it should be very, very, very interesting. And before I go, obviously, guys, OKX. OKX, please sign up. As you can see down below, that says deposit and trade to unlock a mystery box rewards of up to $60,000. It's a lot of money. Of course, we all know that like when you sign up for an exchange and you think you're gonna get $60,000, it's like you need to deposit $60 million first or something to get that. So don't think that you're gonna go deposit $100 and get 60,000, but there are endlessly opportunities there for you guys to get money. And OKX doing exceptionally well, fully backed, really feeling very comfortable there, honestly. Jules says, I don't like space much, can be too tense at times. Yeah, it's easy to say shit when you're not looking someone in the face, which is what you get with the keyboard warriors on Twitter Spaces. But I think it's really been great. I'm enjoying it, and I need to go take like 10 minutes off, guys, because I'm going to be there till, I don't know, Saturday or something. All right, guys, I love you. Thank you so much for tuning in. In general, would love your guys' feedback on what we're doing here. I think you can see that we're working very, very hard to keep up with what's happening on Spaces on YouTube. and making the content better, working really, really hard. So I hope you guys can see that and appreciate that. Until tomorrow, see you guys later, and see you on Spaces, of course. Peace.
That's dope.